Good afternoon, everyone. We're really pleased to have so many people interested in Consumer Federation of Australia's webinar on accessibility and affordability of insurance. My name's Jared Brodie. I'm the chair of the Consumers Federation of Australia, and we run, among other things, webinars from time on issues that are interest to the consumer advocacy sector. And we're pleased to see there's so many people interested in this topic. I'd like to begin by acknowledging the traditional custodians of the land on which we meet today. For me, I'd like to particularly acknowledge the Wurundjeri people of the Kulin Nations, but also pay my respects to First Nations people across the country and pay respects to their elders, past and present. I'd also like to extend that respect to any Aboriginal and Torres Strait Islander people who may be joining us on the webinar. So without further ado, I'm going to be introducing Julia Davis, who is our moderator for today. Julia is an expert in insurance issues, has worked with the Financial Rights Legal Centre for many years, who run the Insurance Law Service, which is a national advice and representation services for consumers who have complaints with insurance companies. So it gets a lot of insight into the issues affecting the community. So I encourage people, if you feel open to it, please open your cameras. It's helpful to see people, but you don't have to equally. But we're very happy to see your faces as well. And there will be Q&A towards the end. So I will hand over to Julia.
Awesome. You guys can hear me okay? Yep, great. Hello. Yeah, a little bit of housekeeping. This is being recorded, so if you don't want your face recorded, turn off your camera. But as Jared said, it's really nice to talk to faces and not to like the ether. So by all means, keep your camera on if you're comfortable with that. Yeah, and thanks, Jared, for introducing me. I appreciate that. It's nice you called me an expert. I have been at Financial Rights for almost 10 years, and I'm guessing a lot of you know what Financial Rights is. For those of you who don't, it's a community legal center. We give free legal advice to consumers in financial stress. We do have a national insurance law service, which talks to about 5,000 or 6,000 insurance consumers every year. And I'm a lawyer, but what I do mostly there is the policy and law reform advocacy. And I've been really interested in this issue of insurance in a changing climate for many years. And the interest really comes from talking to people on the phones, the people who ring us who are struggling with insurance affordability and really don't know what to do. They've got nowhere to turn. So I guess I'll just introduce this topic a little bit before I introduce our two speakers. When I'm taking calls at the Insurance Law Service, it's very clear that our clients in the social justice sector are some of the most vulnerable in Australia. And climate change is going to exacerbate those underlying vulnerabilities. They're going to be some of the most affected by the uneven effects of climate change. And trying to help these consumers in a changing climate is going to be hard because issues around insurance affordability don't have any easy solutions. People on low incomes are impacted the worst by extreme weather events because they don't have the same financial means to recover or adapt to a changing climate. And on top of that, low-cost housing, including rental properties, tends to be in higher risk areas and tends to be built to less resilient standards. There's a report that came out a couple months ago by the Actuaries Institute that I think was excellent. And it found that 1 million households in Australia already face extreme levels of insurance stress, and they're going to bear the brunt of future premium hikes driven by climate change. And what I liked about that report is they really made an effort to define what they meant by insurance stress and vulnerable households. And what they found is that 1 in 10 households are spending the largest share of their income on insurance, and they measured that as an average of 7.5 weeks of pre-tax income on their premiums, compared to the rest of us who spend on average about 1 week of income on our insurance. So the overlap between climate risk and socioeconomic disadvantage means that most vulnerable people are likely to live in the least resilient housing in the most risky areas. And what can we do about that? You know, I think I'm coming from a place assuming that we want to have thriving regional communities and that we care about protecting vulnerable members in our society. So I'm hoping you guys are all coming from that perspective as well. And we aren't the first ones to talk about this, of course. Many inquiries and reports have tried to address the issue of insurance affordability in Australia in a changing climate. We've had a Royal Commission, we've had Senate inquiries, the ACCC did a 3-year extensive investigation, we've had academic articles, independent reports, much more. And solutions that have been put forward range from tax reform to better building standards, to government-run insurers or government-backed reinsurers, to better public information about climate perils, or even compulsory relocation of whole towns. So I think it's fair to say that there will be no silver bullet. So where this webinar lies in all of that is that I personally am very interested in the idea of giving direct subsidies to low-income Australians to pay for insurance premiums. This is controversial. The government has already said they don't want to do this. I'd like to go even further, to be honest, and I think we should start talking about home and contents and car insurance like an essential service. Something without which the safety, health, or welfare of the community would be seriously prejudiced. So the aim for today is to talk to some other strategic thinkers about 2 well-known reports that they have written, which both recommend actually that the Australian government should consider subsidizing the cost of insurance premiums for vulnerable households. So the first is Nick O'Kane, who led the ACCC's Northern Australia Insurance Inquiry, and that reported to government in November 2020. He's currently the executive director of the ACCC's Financial Services Competition Team within the Competition Division. The team monitors and promotes competition across the financial sector through inquiries and market studies, ongoing monitoring, engagement in regulatory reform processes, industry engagement, and input into the ACCC's consideration of complex financial services matters. In addition to his work on the Northern Australia Inquiry, Nick also has extensive experience in water markets and trading. And prior to this, Nick worked for a number of years in the ACCC's nascent consumer liaison team on issues including debt collection practices and scams. And the second person we're going to talk to is Toby Freeman. He authored the Protecting the Basics report on access to insurance, which was published by the South Australian Council of Social Service just this year. And Toby is a senior research fellow and director of research at Stretton Health Equity, which is a research group at the University of Adelaide. He was previously a policy officer at the South Australian Council of Social Service, and he authored the report that we're going to talk about today. So without further ado, I'm going to hand it over to Nick. He's got a presentation for you about the Northern Australia Inquiry report that he led. Please, if you have questions, toss them in the chat. Jared has promised to help me manage the questions. And we may answer questions just to Nick after he's done speaking, or if there aren't a lot of questions, then we'll wait till the end. So that's enough for me. Go for it, Nick.
Thanks, Julia. I'll just share my screen. Just bear with me for a moment. Sorry, I'm not a native Zoom user, and I did do a practice run, which now I can't replicate, so bear with me for a moment. Okay, can people see the presentation?
Yep.
Brilliant. Okay, well, first of all, thank you very much for the invite. I find insurance issues quite fascinating, which my children can't quite believe, and they've now used insurance as a byword for boredom, or a way to get them to sleep at night. But I didn't really have an insurance background when the ACCC was given this inquiry, so it's been a fairly steep learning curve, and I'm sure still a lot more that I don't know about insurance. But we were given an inquiry back in 2017, which is what I'll be talking to you today about. So I'll give you a bit of background to us getting that inquiry, a bit of an overview of the findings. I'll go through that fairly quickly, and I'm happy to make the slides available afterwards if people want them. I'll spend a bit more time talking about some of our recommendations that we made, and those recommendations were to industry and to state and territory governments and to the Commonwealth Government. So as yet, there is no Commonwealth Government response to that, or state and territory government responses either. So the recommendations I'll be speaking to, there have been some developments that I'll just note in the current state of play. And then I'll just talk briefly about the ACCC's new insurance monitoring role, and then happy to answer any questions at the end. So the background, I mean, as you're all aware, and as Julia indicated in the intro, high insurance premiums are a real concern for a lot of Australians, particularly in Northern Australia, but obviously as we're increasingly seeing, not just in Northern Australia. And this had been a pretty live issue for people up there for a long time. And there'd been some task force and parliamentary reviews. But then in the budget process in 2017, the ACCC was directed to undertake our inquiry. And so under our legislation, the Competition and Consumer Act, we can be directed by government to undertake these inquiries. And with that comes the ability to compel information from suppliers, and whether that's data or documents, or in our case, both. It was a fairly long inquiry, as these things go, a bit over 3 years. Which was a blessing and a curse. It meant I didn't think about very little other than insurance for 3 years, but it also meant we could really dive into a lot of issues, perhaps in perhaps more depth than others have been able to, and particularly because we were able to compel information directly from insurers, which helps you get a lot of answers to a lot of questions. We spent a fair bit of time, especially early on, consulting with consumers and industry, but we were particularly keen to hear directly from consumers. And we did a number of public forums in Northern Australia. And I've got on the slide there some of the concerns that were expressed to us in those public forums and in the submission process. And
Nick, just to interrupt you, sorry, I think we're still on your first slide. Just realise
okay.
whether you know that we're not.
No, I didn't. So thank you.
That's okay.
Right. Okay.
It's showing the actual
The title,
the PowerPoint app. Yeah.
All right. I might just try sharing it again, Jared. Hang on a sec. Sorry about that.
No problem.
Okay. Can you see a slide there now? What we heard in consultation?
Perfect. Yeah, we got it.
Lovely. All right. Well, now you can actually see on the screen some of the concerns that we heard, but a lot of these won't really be new to a lot of you. But what was really impactful at the time for both the staff working on the inquiry and also the commissioners that went out on these public forums was just the very real human cost of some of these insurance issues. So we heard from people who had been struggling with very high and rising premiums, and they were at the point where they'd done pretty much everything they could possibly do to manage that, whether it be through accepting high excess levels, dropping their sum insured, dropping their contents cover, agreeing to exclusions, shopping around to a very great extent. And they were still at the point, or reaching the point, where it was becoming something they just couldn't afford on their income. And the stress that comes with that is very great when people aren't able to protect what is, by far their largest asset, and they're living, particularly when they're living in a high risk zone. It really does weigh on a lot of people. And so again, this won't be news to just about everyone on this call, but it was a genuinely compelling insight for the team at the outset of the inquiry. So quite depressing in one sense, but also motivating for us to try and find some way through there. Perhaps quite relevantly to the topic of this webinar is that bottom point. And that was a view that we did hear about people going, you know, insurance is really, may not be considered an essential service, but many people absolutely see it as essential. They do not want to go without it. They feel they must have it. In the context of people borrowing to buy property, it's usually or nearly always a mortgage requirement that they do have it. If you're talking about people in strata complex, it's a legal requirement that they do have it. So it really does have that that characteristic of an essential service, but as we found throughout the inquiry, it doesn't share some of the protections that are there for consumers that we do see in other essential services. So we'll get to that in some of the recommendations in a moment. So as I said, I'll go through these findings reasonably quickly. If you're particularly interested, I do recommend looking at the exact summary of our final report, which is on the ACCC website. It's about 10 or so pages, I think. It really does encapsulate kind of all the things that we found over the course of the inquiry. And it also saves you from reading, I think it's about 690 pages of final report as well. So you're welcome to do that as well if you'd like. But just, you know, the first finding, you might go, well, that's pretty obvious. Yep, premiums are very high. They're going up quickly. And they have been. What we're able to do was just highlight how that compared to other areas. The report goes into a fair bit of detail about how that looks across Australia and the kind of the correlation that you see with higher risk areas, particularly in the case of Northern Australia with cyclones. What we're able to do is also break down some of those premiums into the components that insurers allocate to various risks, and again, primarily cyclone, but also flood in some areas, and how that influences their technical prices, which then feed through into the prices that they quote to customers. This just gives you an idea that the really tall one is Northern Western Australia, where premiums were really significantly higher even than in other parts of Northern Australia. And I stress these are averages. So, you know, as with any part of the country, there are properties that are lower risk and there are properties that are higher risk. And so what we reported on in this slide is very much the average, but even the average is significantly higher than most people in the country would be paying for their insurance. These are some of the premium components that we observed, and as you can see, they do vary a lot by location, as you would expect, with the underlying risk levels. This next slide just gives a bit of an insight into the spreads of premiums that we observed. So these were actual premiums. We had a number of case studies on particular locations. Basically the box represents 50% of premiums. The lines go up to the 90th percentile and down to the 10th percentile. So there are even some premium, or 10% of premiums were even higher than the line on these box plots. But you can see there the range that exists within areas, which goes well beyond just differences in the sum insured. So a big part of the inquiry, particularly early on, was trying to understand how insurers set their premiums. And what we observed and could see from their documents is a real move towards granular pricing and risk assessments, so down to the property level, and a move away from, you know, historic practices where you might have properties rated at a postcode or even a higher level of aggregation. And that, of course, means that different houses, even within a relatively confined geographic area, may face very different insurance premiums depending on their characteristics. We also saw how insurers adjusted or made premium adjustments, which is the term we gave to it. And these are adjustments to the technical premium that insurers would calculate for a house, which is purely based on their view of risk. And so these adjustments were made for a number of reasons. It could be to smooth out increases if they've changed their risk assessment for a property. It could be for competitive reasons, if they, for example, wanted to position themselves with regard to their rivals, or it could be because they wanted to adjust their exposure in a particular area. And insurers really don't like having too much concentration of risk in particular areas. One thing that really jumped out, and again probably doesn't surprise many, is the, for want of a better term, loyalty tax that applies. So we did see quite a significant difference between average premiums paid by renewing customers versus new customers, and that could be quite significant. So, that's just some averages on that slide for that renewing versus new customer difference. So we wanted to understand better the costs that insurers were facing in Northern Australia, and obviously in an area that's highly exposed to significant natural perils, that those costs can be very significant at times and also quite lumpy. Insurers' cost allocations were used to estimate profit in the area, and by and large it wasn't a very profitable area for them to be in, although I do note the profitability certainly improved a lot after there were some significant premium increases around 2013-14. It's, by the time we had finished our monitoring, still not a hugely profitable area or anything like that, but the premium increases had made it, had stemmed the losses that the insurers were facing in aggregate. Of course, every insurer is different, and some were profitable in some years, but not others, and others had a different pattern. One thing, as mentioned before, where we had insurers adjusting premiums for concentration risk, we did observe quite an unusual market dynamic where in higher risk areas and for higher risk customers, insurers wouldn't necessarily be that eager to win their customer. So it did really jump out as being unusual to what you would normally expect in a normal market. And it means that we really need to think about insurance almost at the individual level, where customers who are considered high risk will have a lot less competition for their business than the better risk customers. That's not unique to insurance, but it is different from perhaps some essential services where you have pretty much a postage stamp pricing or a regulated price level. We also saw quite a significant diffusion of brands, which the Productivity Commission noted before us, but we could really see, this chart here shows the insurers on the outside, but all their brands on the inside, and so from a consumer's point of view, they see a lot more options compared to the underlying insurers. And I'll just note that this chart is now a bit outdated because we've got Westpac and CommonSure no longer in this space. We'd spent a fair bit of time trying to get a good guide on the level of non-insurance, and we used a combination of our own data and census data to do that. Again, unsurprisingly, higher rates of non-insurance in Northern Australia, 20% versus 11% for the rest of the country. And when we undertook some research, by far 95% of those without insurance attributed this to cost. So it really wasn't a case of people just choosing not to be uninsured. They wanted to be, they couldn't justify the cost. We also noted there wasn't a lot of help there for customers who were struggling to pay their premiums, including in the short term. A big part of the inquiry was looking at how easy it was or difficult it was for consumers to shop around and to get a better deal. what was really striking to me was insurers are vary considerably in their quotes for the same property, and in some cases up to double. And that's a combination of insurers having different risk models, different approaches to premium adjustments. But what it does mean is that usually, but of course not always, consumers can get a lower price elsewhere. But complicating that is the fact that the policy wording will be different. There might be different excess, different inclusions and exclusions. So it really is quite a difficult job for consumers to navigate their way through this. Brokers can play a role here. They're used a little bit by consumers and quite a lot by people searching for strata insurance. But we also had concerns with how they were remunerated by insurers and the conflicted remuneration that we could see there.
Nick, I'm going to have to give you a 2-minute warning.
Yeah,
Sorry.
no, that's fine. I'll just skim over the last bit here. There was no magic bullet that we could see, as Julie indicated. We made a bunch of recommendations, which, again, I really do recommend reading if you're interested, the exec summary, which will go through those. We think a lot of those recommendations are applicable throughout Australia. They're not just Northern Australia specific recommendations. A lot of them are really aimed at improving the ability of consumers to shop around to get a better deal. But a large number of them are about trying to address this issue in the longer term through adjustments to building standards, to relating to mitigation and relating to land use planning, because we could identify that a lot of the issues that we're seeing now were down to decisions made in the past on those issues. And as Julia indicated in the intro, with forecast climate change impacts, these issues really will continue to grow in their prevalence throughout the country. And if action is taken now, we can help reduce the impact of insurance affordability and availability issues going forward. Look, I'll just finish if I can, skipping through the recommendations. Is just to note that the government has introduced a cyclone and related flood reinsurance pool, and the ACCC has been asked to monitor the impact that has on premiums. So that's a new role for the ACCC. Importantly, it doesn't have a role directly setting insurance prices, nor does it have a role forcing insurers into the pool before they have to. So that will be a real focus for the ACCC going forward. But I'll leave it there. Thank you very much, and happy to answer any questions now or at the end if that's easier. Thanks.
Yeah, I think we might jump to Toby, if that's okay, Toby, and then we'll just do questions all together at the end. I can see, Paul, you have been thinking about this as much as I have, and you have lots of questions in the chat. Yeah, let's let Toby talk about his report and findings, and then we'll do some questions overall.
Fantastic. Thanks, Julia. And can I simply just check that you can see my slides progress? Oh, good. Okay, thank you. Well, can I start just by acknowledging that I'm presenting this from the lands of the Kaurna people, where I live and work, and pay my respects to elders past and present. As Julia said in my intro, I previously worked at the South Australian Council of Social Service. So if you haven't heard of the Councils of Social Service, each state has one, and then there's a national one called SACOSS. And the briefs of these councils are to be peak bodies for the non-government organisations that service people living in poverty, essentially, and trying to advocate for policy issues that affect people living in poverty. So they hired me to work on a project that looked at the issue of access to home, contents and vehicle insurance for people on low incomes. So SACOSS ought to get all the credit for acknowledging that it was an issue, for applying and winning the money that they then used to hire me. And since working for them on this project, which was just an absolute privilege, I've since moved to the University of Adelaide. So when I inevitably say something daft, it's not something that reflects back on SACOSS anymore. But it's a pleasure to be able to keep talking about this. My children also suspected I was the most boring person in the universe working on this project, but it was really, really interesting, and I felt really lucky to be able to work on it. So it was a 6-month project that ran from June to December last year, and then, as Julie said, we released the report earlier this year. It was funded through a grant system called the National Disaster Risk Reduction Framework grants. And what we wanted to look at was what funding models could the councils of social service advocate for to improve people on low incomes access to home contents and vehicle insurance. And I really love this Good Shepherd microfinance quote that just really lays out that, and this was 2017 before we've had, the really awful couple of years that we've had, where I think we've kind of seen this come to fruition, that we know there's swathes of people out there who've been affected by disasters that haven't been able to be insured and are now falling into poverty and homelessness on really quite a large scale. So it's a huge issue facing our society that we really need to think about. So we did it with the key partners of the South Australian Financial Counselling Association, Good Shepherd, which run Good Money stores, and Red Cross. And we're really lucky to have a really incredible guiding group. We had Julia from the Financial Legal Rights Centre, we had Brotherhood of St Lawrence, we had Multicultural Communities Council of South Australia, all inputting into the project. And we reviewed national and international literature. We did focus groups with community members, and I did a whole swathe of interviews over Zoom with various stakeholders, and we had a workshop to kind of work through some of the proposals coming out of the project. So very similar to what Nick just said, our research also emphasised that affordability is the main barrier, and it was the one we were interested in. There are others, so it was very clear from those community workshops that trust in insurance companies is very low. And there were lots of people who said, well, I don't think they're going to pay out. They had stories of not getting paid out in the past, or friends or family who made claims that weren't honoured. And so if you don't believe they're going to pay out, what's the point of getting insurance? So that's certainly another issue. Payment systems in insurance are still geared towards annual lump sums with penalties if you go more frequent to that, and that's a barrier for some people on low incomes. And again, as Nick's already talked about, the complexity of the products is a barrier to being able to understand and to shop around and so forth. But there weren't barriers that we were able to deal with in this project. And I'll also note there's microinsurance is a term that means insurance that specifically targets people on low incomes. And we have one microinsurance product in Australia, and that's Essentials by AAI, which in that circle that Nick showed comes under Suncorp. So we really struggled to find good data on the extent of uninsurance as well. I think what I'm presenting here doesn't conflict with what Nick said. So as best we could find from a variety of different surveys and data sources, somewhere between 1 in 15 and 1 in 10 low-income home-owning households don't have home insurance on that house. Approximately 1 in 2 or 3 people on a low income don't have insurance for their contents, and that is far higher for renters than for homeowners. And 1 in 4 people on a low income with a vehicle don't have comprehensive vehicle insurance. So while we were doing this project, there was a horrendous hailstorm in South Australia, and I was talking to someone from a community legal centre who went out to Salisbury where the storm was worst, which is a very, very low income area. And there was lots and lots of vehicle damage to vehicles that just were not covered by comprehensive vehicle insurance. So it's a huge issue for the community. And we know beyond those stats that there are definite pockets of very, very high uninsurance. So Maury and Lassiter audited people who'd been applying for no interest loans through an NGO and found that only 8% of those people had any home or contents insurance and only 30% had car insurance. So people who are really financially stressed, who are applying for these no interest loans, are going to be in deep trouble if they lose their assets through a disaster. Again, I'll whip through it because Julia talked really well to this at the start, but we know from data that people on low incomes are more likely to live in areas that have a higher risk of natural disasters because that's where they can afford to live. They're less likely to have the resources or the power to engage in any way to mitigate their risk of natural disaster, and they're less likely to have the resources to recover up following the natural disaster. We know that during the COVID pandemic, that financial strain has increased on a lot of households, and that's likely to have seen insurance payments lapse. And a colleague, Dr. Antonia Settle, has shown that that's across the income spectrum, that we've seen people lose their insurance coverage because they're no longer able to pay those insurance premiums. And surely that's gotten worse in, the recent inflation causing this, really horrible cost of living crisis we're in at the moment. And again, as has already been covered, insurance premiums have been rising. So in Adelaide, they've doubled since 2000, and then in 2021 alone, they increased another 8.5%. And they're going to continue to increase with natural disasters becoming more and more frequent because of climate change. So just to be clear, we were looking at affordability of insurance generally. We don't yet in South Australia have much evidence that there's these geographic areas of massive high risk and consequent massively high insurance premiums. We have a little bit of evidence, but it's not yet a central issue like it is in Northern Australia or in the flood areas like Lismore. So we were just interested in people living wherever on a low income and whether they had the ability to afford insurance. So I found Julia's question of visit an essential service a really important and interesting one. Good Shepherd certainly have argued that it is an essential product. If you have any assets at all, then it is essential to be able to protect them in the face of loss from natural disasters. Otherwise, again, you're at high risk of slipping into poverty and homelessness. And when you look at all of our glossy disaster resilience documents, they all come down to a fundamental shifting of responsibility to individuals to be able to go out and get insurance coverage for their homes and their vehicles and their contents. So that is our disaster resilience strategy. There is no plan B in any of these documents for if people don't have insurance coverage. So I think that is a core argument. If all of our strategies rest on this, then therefore surely it's essential. And I'll say there's no backup plan, but we did see Peter Dutton, when he was in government, try and start a GoFundMe for the flood victims. So I think that just shows that we're really grasping at straws when it comes to how to deal with this. So we came up with 3 recommendations. Today, I'm just going to talk about the first one, the concession scheme. But if you're interested, the report is available on the SACOSS website. And that also goes through some great ideas for social housing tenants, particularly from the UK, the potential to set up a not-for-profit microinsurance scheme. And then we talk through why we rejected a whole range of other ideas that are floating around in this space. So if you're interested in any of those, please do go to the report and have a read. But the concession scheme is what we picked out as a real possible, immediate and direct support for people struggling to afford insurance. And it's what SACOSS took to our recent March state election. And we didn't get very far with it, but we felt that at least we got it on the agenda of all the parties. So they're aware that they need to be thinking about access to insurance, even if they weren't willing to do anything about it just yet. It is what Nick's ACCC report recommended in Northern Australia as a targeted way to address affordability. And it's a direct way of addressing unaffordability for those on low incomes. There is precedence for this. We already subsidise private health insurance Australia to the tune of $6 billion. And I would argue that's really for very little obvious benefit. And that $6 billion could be better spent in making sure people don't fall into poverty. And we also have other Australian cost of living subsidies around other essentials like water and electricity and so on. And I did also find in the international literature, there is precedence from China. There were 2 provinces that had different models, but essentially was about subsidising household disaster insurance to make sure that people were covered. So if we do want to go down the route of providing concessions around insurance, well, what mechanism should we do it for? I think in some ways, ideally, you'd want to be able to do it through insurers so you could take it off the bill so people didn't have to fork out the money. But there's such massive ambiguity and opaqueness in how insurance companies calculate the premium that they eventually charge individual consumers. And it is calculated individually. So there's no way to easily gauge whether or not they're passing on that concession in full. And there's the risk that they'll take that concession into account when calculating the premiums, which will really blunt the savings that might be achieved. So really, we felt that a reimbursement model is needed, even though that means people have to fork out the money and then ask for some of it back. In South Australia, we have the Concessions SA scheme, which covers concessions for cost of living, power, water, and residential park residents. So why not add on insurance to that scheme? And the benefit of the residential parks residents is that is a group of people that already report real barriers and struggles in accessing insurance. So it provides an opportunity to further help that group of people. We considered the National Rent Assistance Scheme, that you could add on contents insurance subsidy nationally to that. But rent assistance is already so massively insufficient that you wonder whether it will have much of an effect. This is how it's done in parts of Canada. But the other negative is that the eligibility criteria for rent assistance is narrower than the Concessions SA scheme. So for South Australia, it'll reach more people on low incomes if we try and advocate for it to be delivered through Concessions SA than through rent assistance. We really thought that it should be a percentage-based approach rather than just a flat amount off your insurance bill. And that way it will scale to the cost of your insurance. So if people have to pay a higher premium, then they'll get a bigger concession back. And there's the potential that that will give the government more incentive to address the affordability of insurance, because if you did it that way, as insurance premiums rise, the bill to government to subsidise those concessions will also rise. So hopefully that gives them a bit incentive to go, oh, okay, we really need to do something about insurance affordability. We got a lot of pushback, generally from industry about the argument that you shouldn't provide any subsidies to insurance premiums because those premiums are a way of signalling risk, that this is a high risk issue. But I really, really disagree with that. As an outsider, I think that's just an immensely socially unjust way of approaching this problem. As we've said, people on low incomes are in areas of high risk because that's the only housing they can afford. And it's just cruel and unjust policy to argue that they should just be left to their own resources if they can't afford massively high insurance premiums because that's the only housing they can afford. And I think we really need a response that emphasises solidarity, not individual responsibility. And again, governments here have the most capacity to mitigate risk of natural disasters. Renters on low income don't have any power to make any changes at all and may not have the resources to make any changes. So pushing responsibility to them to mitigate their risk of climate change, I think, is just obscene. It's governments who have the collective capacity to actually do something meaningful about this. How much of a percent should we try and argue for a concession for? The community focus groups had different opinions, but it kind of settled on around 20% of the premium would be a helpful amount to kind of subsidise. But they were very clear they didn't want this at the expense of any of their other concessions that really made their life livable. So it would have to be on top of additionally what they have. As well as having a concession scheme, we thought it was really important to also be able to raise awareness of the concessions and put lots of effort into that. And then there's an excellent model from Victoria when they had their $250 power saving bonus, where the government partnered with NGOs that had relationships with different elements of the community. And those groups were actually able to go out and really support people most in need to fill out those applications to get access to those concessions and make sure they're aware they were there. And so I think if you actually want these concessions to have an impact on increasing insurance rates, you'd need to put similar effort into, pounding the pavement, knocking on doors in areas where you really needed to increase those insurance rates. So thank you. I'll stop it there.
Thank you, Toby. Look, that is great. That was exactly what I was hoping you would talk about. And we've got 15 minutes left, and there's some great questions in the chat. I might just flag that we might not get through all these questions, and I haven't said this to Toby and Nick, but I might just send them these questions in writing, and if they have any thoughts about them, they can answer them, and we can circulate that to everyone, because I think these are some really meaty questions. Just for purely selfish reasons, I have a question, and I'm going to ask it first because I'm the one talking. This is a question for Nick, and look, I know this year the ACCC has listed its enforcement and compliance priorities as including competition and consumer issues arising from the pricing and selling of essential services. So I'm wondering if home contents and car insurance, if we got it over the line and state governments or the federal government started considering it an essential service, how might that change how regulators treat general insurance? What kind of tools do you think it would give you guys?
That's a good question. I'm not sure to necessarily give us any extra tools. I mean, in relation to insurance in particular, if we're talking consumer protection issues, that's one for ASIC and rather than us. But I tend to, I mean, in the inquiry, we tended to focus more on the things that we thought could improve the operation of the market, and that would, we thought, benefit nearly all consumers, but obviously not solve all consumers' issues in as far as insurance. So that was more of the focus rather than trying to meet a test for whether something was an essential service. And there's also, arguably different views about what something has to, what criteria something has to satisfy to be considered an essential service. One thing I do want to note is where we really focused on the question of the protections for consumers was in relation to things like what assistance insurers provided to people that were struggling to pay their premiums. And so we made a recommendation there about what help insurers should be required to provide to consumers, and that includes things like considering fee waivers, getting rid of or reducing extra costs that you may face if you want to pay monthly or more frequently, and things like payment deferrals. So the aim there was not to replicate what we see in, say, energy, which is, it's a different kind of market with a, but to draw on some of those insights. So consumers that, for whatever reason, faced a shorter term hit, they might have lost their job, or they might have incurred a significant unexpected expense and they just couldn't meet the premium when it was due. We don't want people to drop out of insurance, because we know that if you drop out of insurance, it's quite unlikely that you'll then pick it up again in the future. And we want to see that rate of non-insurance decrease. We don't want it to grow any further.
Thank you for that. I might jump to one of Paul's questions, which maybe, Toby, you have some thoughts on this. And his first question really is about the scale that we're talking about. If we're going to give concessions on general insurance, it's not as much of an issue in South Australia as we see in like Northern Australia. But, if somebody has an annual premium of $5,000, in order to reduce that to a point where they could actually afford it, we're talking big money every year. Did you get any impression from community about the scale of this?
Well, no, we didn't have the data really to be able to cost it for South Australia. But my argument would be the scale of the problem is enormous. So either we're letting people suffer, or we're pouring money, a large amount of money in some shape or form, whether that's buybacks of property or the reinsurance pool or subsidies. I don't think there's a way of having a societal response to this issue without it costing a lot. The only question is how do we best spend that money to address the issue? But it's going to cost a lot regardless of what we end up the solution needs to be.
Nick, there's a couple of good questions in here about competition, and you said that's really was the focus of the ACCC's report. Gail says, isn't part of the problem an uncompetitive market, and how will subsidizing an uncompetitive market make any sense? Are we starting to get to the point where there's a case for government insurance? And Paul asks something as well about competition, where he says, is there a component here for increasing competition? How do we attract insurers to new areas while still maintaining the same protections for insurers, without having to force them to take on risk they don't want to? Do you have any thoughts about competition? Are we getting to a point where just we have market failure in some areas, or do we think that there is still things that competition can solve?
I mean, for us, competition is obviously really important, given our mandate. In our inquiry, our focus was on one of our focus was on how insurers do compete. And I mentioned earlier, they compete differently in different areas and for different types of consumers. A lot of our recommendations were about making those markets work better for consumers. So it is really hard for people, even if there are multiple insurers providing insurance to a particular area or to their property, it's really time consuming and really difficult to compare between them. We did an estimate, I can't remember the exact numbers, of just how long it would take if you actually sat down and read through the PDS for each quote and to get the quote. And it was hours and hours and hours, and no one in reality has that kind of time to spare. So we made a bunch of recommendations about standardizing terms, about reforming standard cover, and there was some announcement recently from the government in the October budget about work towards that, which is good news. But also we made recommendations about considering a government comparison website, just to try and simplify that. Now I say that, but note straight away that won't work for everyone. It won't. It will enable people to hopefully get a better deal, but if you are in a particularly risky location and property, that could help, but it may not help much, or it may not help enough, because you've probably already done quite a bit of legwork of trying to find a better deal. So it was part of what we saw as being a response, but recognising it's not a panacea. In terms of encouraging greater competition, I mean, that's one of the stated objectives of the government's reinsurance pool. They want to, through the operation of the pool, make it easier for insurers to operate in Northern Australia, and that will be something that our monitoring will look at over the period that we're monitoring the impact of that reinsurance pool as well.
Thank you. Toby, I might toss you one last one around renters. How do we protect renters in this space? They often fall through the cracks, and properties are already maybe not in the best state and are not very, not repaired properly. I mean, I know this is something you guys thought about in your report. So do you have anything to say about that?
Well, yeah, thanks, Julie. For the renters, I think, what they need is an affordable easy contents insurance scheme. So that's one of the ideas behind the Essentials by AAI, is that provides vehicle, you know, cut price vehicle insurance and contents insurance that is designed to be more affordable than general schemes. We know contents insurance rates among renters is really quite low, and I think I guess there's awareness raising as well as addressing affordability issues. And then, as you say, there's the issue of it's the landlord's responsibility to mitigate the risk and to do any retrofitting. But by and large, we're pretty awful at trying to regulate and protect renters. I think we're too scared to do anything that might affect the amount of profit that landlords are making off their investment properties. So I think, again, that's not something we do very well in minimum standards in terms of heating or cooling or retrofitting for natural disaster risk. And it's something I think our government should be much more brave on.
All right, I think we're very near 2 o'clock, so we might have to wrap it up. As I flagged, I'll send these questions all to Nick and Toby, and if they have any strong feelings on any of them, by all means, put it in writing and we can share it with everyone who attended today. Look, I don't think we got to the silver bullet. I think that there is no silver bullet here, but these are ideas that I think need to get hashed out in the public discourse. I think we need to push the envelope here and think outside the box, because it's a really huge, complex problem, and we know for a fact that it's just going to get worse. You know, I have my eye on the next webinar, something around managed retreat, because I think that's also another really interesting part of this puzzle. So I really want to thank Nick and thank Toby for sharing your thoughts today. And by all means, go read the 2 reports that they authored, because they're both excellent, although Nick's is like 600 pages. So just start with like the executive summary. And yeah, that's it from me. Please join me in giving an emoji clap to these wonderful speakers. And yeah, look out for the next CFA insurance affordability webinar.
Yeah, thanks, Julia. I might just give a plug for the CFA at the end for those interested to find out more about the CFA, consumersfederation.org.au, and we're on the social. So please give us a follow and you'll get information about future webinars and events and other consumer advocacy information. And thank you to Julia for all your work in pulling this together. You've done a fantastic job and engaged us in a really important discussion. So thank you.
You're welcome.
Have
Thanks,
a great
everyone.
day, everyone.
Yeah, have a good lunch. Bye.